What's up, everyone? I'm not sure if we were live or not. Are we?
We are live. I'm checking
We
right
are
now.
live. Okay. It wasn't showing on my end. Sorry about that. If you can see us live, please put a 1 in the chat. That way I know for sure. I was trying to use OBS Studio. It did not work out clearly. So we're back on StreamYard. I had this whole nice setup for y'all. My bad. That is 100% on me. If you are brand new, welcome. Welcome to Money Market Truth. My name is Mark, and this is
Mo.
We are a YouTube channel that's focused on everything money, mostly stocks. I am considered the investor. Mo is considered the trader.
Podcast DM.
Yep, absolutely. All right, Mo, all yours. You ready? So everybody, this is your free training on how Mo essentially trades options using supply and demand. And then I'm going to touch really quick before we end the episode on how I get these price predictions, which have been relatively accurate for the most part. I say I've been like 80% accurate on most of the price predictions that I've had last year. There were some that were wrong, but I'm going to show you how you can get your own price predictions and that we don't have to rely on anybody else. You should be able to rely on yourself on where you need to end up buying or establishing a position. So, all right, Mo, all over to you.
All right, guys. So let me quickly tell you, this is my first time doing this on the podcast. So we're going over supply and demand. Here's the goal. After the presentation, you should be able to become aware of what's out there apart from support resistance moving average. And the goal of that is a lot of people rely heavily on these indicators, but they're lag indicators. And what that means is a lot of times when they issue the signal of buying or selling or doing something, it's already too late. What we need to do is follow lead indicators. There's only two lead indicators, price and volume. And I only like to look at indicators that are able to accommodate both of them. If it's not that, then I don't. And that being said, I'm not saying moving average is bad or RSI is bad. You can use it with combination, but I wouldn't recommend using more than two indicators. So you can go supply and demand and moving average, supply and demand, RSI or MACD. That's up to you. So personally, I don't think any indicator is good or bad, but this is something that works for me. If you're someone who used to take a lot of breakouts and you'd get kicked out because the stock would retrace, you want to probably look at supply and demand. So quickly, what is supply and demand and what happens when it does, when there's a balance and imbalance? So, a lot of times the market's just chopping like today. It's because the market is in balance. What that means is the buyers and seller are in agreement with the current price. So you get a balance. Today is not technically an balance day because we were actually going up, but the first, I'd say 2 hours was a balanced chop day. And that's because market buyers and sellers were agreeing. Every commodity, every open or closed marketplace, they all run on supply and demand, believe it or not. So we'll take a quick example. Let's take real estate market. The market's down right now. There's two reasons for that. Reason number one is there's less buyers because of the interest rate going up. People can't afford it. And because of this recession looming, a lot of people are just kind of like holding off on cash. So less demand. Second is that the suppliers, there's so many houses on sale right now in different areas that I'm looking. So because there's so many, if I want to sell my house faster, I'm going to lower down my price. So that's how demand and supply work. Either one of the areas is lacking or both are, and that's how the price fluctuates. As traders, we want to trade in a market that has a lot of imbalance where we don't agree, and that's how you get big moves where buyers and sellers don't agree. Now, before I actually get into it, the whole idea of supply and demand is basically trying to get in where the volume is. Me and you, we cannot move the price of a stock. What we need is big volume to come up for us to move the price. So, what's something that can bring big volume? People with a lot of money. It's usually institutions. So, it's bank, it's funds, or it could be someone in Saudi Arabia playing with 100 million and they target one stock at a certain price, which causes an increase in demand, which causes the run. Or the drop. So, in order for you to learn supply and demand, the first thing you need to know is what's a basing candle. A lot of people have a misconception that the basing candle it's a small candle, it's a small hammer with long wick. A basing candle is a candle of an opposite color of what's happening. I'm making this as simple and I'm dumbing it down for myself too, because that's how I learn and that's how I try to teach. Because a lot of these charts when I first started trading used to confuse me. So things, I've always kept them simple. So what's an opposite candle of color? So if we're looking at a demand zone, demand signifies as buyers, supply signifies as sellers. So when it comes to demand, you think green candles. So what we look for a basing candle, opposite of green is a red. A basing candle will always be red. And the reason for that is we're looking where the sellers exhaust themselves. So in this case, we're selling, 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 selling. Right here, we get a massive green candle. So this now identifies as our demand zone. And we'll get into more. So I covered this already. We want to get into with bank, hedge funds, and institution. These are the people that come with real money. Our job is to get in with them. So you're trying to put your orders with them. The whole idea behind this, to just break it down, if I'm Bank of America and I like Boeing, and Boeing, let's say, is $200, let's say I want to buy 10 million worth of shares. What I will do is I will put a limit order for 200 for Boeing. And that's why round numbers are so important when you're trading. And so what happened is all of a sudden 10 million is going into Boeing. The moment the orders start going through, the price of the stock will start going up. But the limit order is only for 200. So what ends up happening is as it starts going up, other people jump in because 200 is a big resistance level. And when it finally goes up, the limit order is no longer getting filled. Let's say the total amount of shares that they were getting were 100K and only 50K got filled in. There's an order sitting there for 50K for 200. So what we need to do is then watch. When the price goes back to 200, we already drew our demand zone. What I'll personally do is put in an alert. And the moment it gets 200, you put in your order with that. The risk is we can go down, right? How we can go down? Let's say the order sitting there is 50,000, but the sellers are putting an order for 10 million. So it will compensate for those orders. All those buy orders will get filled and will keep going down. But someone who uses demand and supply, you have a clear criteria on where I'm entering, and if the demand zone breaks, where I'm exiting. So there's no confusion. So you have a zone. If the zone breaks, you're out. There's no compromises there. So it's a very good system for people to manage their risk tolerance. What a lot of people do is they'll have like 6, 7 support resistances, and then one breaks, and then you're like, I'll wait till the next one, and then the next one breaks. You're like, I'll wait for the other. In our case, this is the demand zone. This is where we're taking the trade. If the demand zone fails, you're out. Most of the time, you'll lose 10 to 15%, 25% if you're following your rules. So I covered this, how are supply and demand zones. I gave you the idea of Boeing. So let's say Boeing got into at 200, and now the stock is 250. Boeing now is like, okay, we've made enough money. It was a trade for us. They're rebalancing whatever. They want to sell the stocks, right? Now, if they want to sell the stock, they'll put a sell order at 250. They're not just going to hit market order, because if they put in 10 million of market order, it's going to fill them at 200, 195, 190. They don't want to do that. They want to get 250. So they'll put an order for $250. If they put in for $250, what happened is all of a sudden there's an influx of supply, sellers. The price will go down, right? And every time it gets there, until those orders get filled, it'll keep going down. Our job is to get in with them on a put. And our exit would be if it breaks the supply zone. That's why I love it, because it's all about the zone. We get in if the zone bounces. If the zone breaks, we're out. So the risk management, there's no what if. It either happens or it don't. And sometimes it will break, and that happens maybe 4 or 5% since I've been trading this for about 2 years, where it will break the zone, and after 2-3 hours it will try going in. And if that happens, you always have an option of going in, but the time that it's happened, it's not worth it. So I wouldn't really bother about it. Like, quick example, last Friday I took a Tesla trade. I got in, and because it was 0 day, the first candle was green, the second was red, and I lost 50% on a 0 day, so I got kicked out. Then it broke the demand, then again I got back in, and then after that it ran like 600%. So that does happen. Very small percent, but it does happen. So how do you draw? I'm going to skip the PowerPoint after this. I'm going to give you a real example. So give me 1 second. So let's take Apple. It's everyone's favorite stock. Everyone knows about it. And feel free to put in any questions you guys have. I'll answer all of them. Okay, so I'm going to show you guys something, and I'll tell you why I got into this supply and demand in the first place. So this is Apple. And if I was, let's say, looking to buy it on a rally, what I would do is I would set this area as, let's say this area, yeah, around this 153 area as resistance, because what's the definition of resistance? It's basically where you can touch most of the candles, right? That's the point of resistance. And oftentimes what would happen is I would get in and I would get in on the break or resistance and it would break, and then I would lose money because I'd get stopped out. And the reason for that was, if people who know supply and demand, they understand that this is actually a supply zone. So it's right above the resistance. So, and that happens often. And I didn't really talk about supply, but I will now. So remember one thing, a basing candle is a candle of an opposite color. So when it comes to selling supply, that's how you want to correlate, it's always a green candle. So in this case, what's happened here is we were going up, 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 and this was the last green candle before we started selling, meaning there is supply, there's sell order around here, which is why we basically look at this kind of stuff. So Mark, is it making sense? Because you already know, but am I like doing a good job at explaining it?
Yeah, you're good.
Okay. All right. So that's supply. So let me ask people, when you look at, let's say, this area here, do you guys see a demand zone? Do you see, remember, opposite color candles? So there's a bunch of green candles. Do we see a demand zone here? If there is, can you point out? Anyone? Okay, Danny, you know this. So tell me, where do you see a supply here? Sorry, I mean demand. So there's a bunch of green candles here. Yeah. So we would draw, and the way you draw the demand zone is you take the lower body and the lower wick. You never take the top wick. And the way I color them is I will mark them green. So this now becomes my demand zone. This is where you identify that this could be a potential demand zone. This is not a confirmation yet. This is just an identification that this could be it. Now we wait for the test. So look, it got tested here, and then it ran right to the supply, right? And then it got tested again, and then it ran back to the supply, and then it got tested here, and it finally broke. That brings me to the second point. A demand zone, every single time it gets tested, it makes it weaker, right? So if, let's say, Boeing example, if there's a 50,000 shares sitting on that demand, every single time the candle dips there, those orders get filled. So this thing got tested so many times. The highest probability demand plays are the ones that have not been tested yet, or only once. So this was perfect. But did you notice when this went in, it went pretty close to the zone. And then you could tell that somewhere here are the prices for the buy. And here finally it tried making back up and it broke. So it brings me to another point. Mark, can you check the comments? I'm not sure. This person is blasting us.
Oh yeah, no, that's Fuhat. It's keep going, man. That's Fuhat.
All right.
He likes to troll, so just ignore.
Okay, cool. So when does when does a zone get invalidated? It gets invalidated when a candle gets formed outside the zone. So in this case, I'm zooming in. This is what invalidated the zone. So at this point, you will delete it. So that's how let's go another chart, and I'm going to see if anyone wants to kind of guess where the demand zones would be. So this is a daily demand zone here. Daily AMD chart here, and we're looking at trying to identify demand zone. So does anyone see a demand zone here? So we see a clear rally. We see the chart, this went from $60 all the way to $69. So anyone tell me where we see a demand zone? Danny, you can jump in if you want, bro. Anyone here see a demand zone? Okay, I'm gonna let you guys know, and we'll cover more of this in the future too. But look, this is a potential demand zone. One thing that we want to identify, and I'll show you, is you got it, Kivo. You want to identify if this is the true zone where it occurred, or you have to go back to make sure that is this the point of origin. In this case, it's not, because if you go back, this is where it actually originated. So let me redraw it. With some practice, you guys can become really good at it. So this is a demand zone. Always know where the origin is, because if you don't know the origin and you said it's here and it gets here, you might get stopped out. So always know where the origin is. In this case, it's here. So if you notice, this is where we identify, and this was the test. It jumped right off. So now let's see if we can find a supply zone. So let's quickly look, and how the easiest way to look at a supply zone is count rejection. So we got rejected here, okay? Then we got rejected here. Then we got rejected here. Let's keep going back. This is the green candle which initiated the drop. So this is the origin of the drop. So what you do, and when you're doing a supply zone, you always take the top wick, but never the lower wick. In this case, there is no lower wick, so I'm going to color this red. So you guys will watch where it projected from. So do you guys see? This is where we identified it was a zone. This is where it confirmed that this would happen. So it rejected here once, rejected here twice, rejected here 3 times, 4 times. So most likely this is a weak zone. It's still a zone, but it's a weak zone because it's been tested so many times. And that's sort of what I look at. Now, Mark, do you think there's anything else? I'm going to just give them more example. Is there anything that you have questions about that you think they should know about?
Yes, the only thing I would like to touch on is the fact that a lot of people kind of sometimes get the supply and demand and support and resistance confused. Can you please explain what the difference is?
So a lot of people say that support and resistance are like supply and demand, which is not true, because support and resistance is based on historical data. So think about this. When we're drawing support, we say, okay, so it's jumped off here, here, here in the past. So without any test. Here we first identify it, then test it. In support and resistance, you could go back, draw a daily support that happened a year ago, and you could draw it, be like, this is where it should bounce. So it's based on historical data. There's no live data supporting it. Also, when support breaks, it becomes resistance. When resistance breaks, it becomes support. So vice versa. But supply and demand, that's not what happens. Once the supply breaks, you delete it. And then you look for new zones. Supply and data is based on actual real volume. That's why we test it. So right now we're doing daily, but when we're trading, we're looking at 30 minutes, 15 minutes, 5 minutes. We're trying to identify zones. So in this case, now I'll give you an example. You're sitting at $69. You're like, Mo, are we getting a 75 to AMD? Well, let's look at a shorter time frame, what's happening. So this now is 1 hour. If you look at it here, big waterfall here, opposite candle is this right here. So this is a supply zone. So a lot of people, bag holders that are stuck, they're going to try getting rid of it here. So tomorrow, what you need to watch out for is, does this area break or not? I'll give you a better example because I'm actually watching this for tomorrow. NVIDIA, this should be green. Sometimes I don't change it because I get lazy, but we're watching this. If this breaks tomorrow, we're looking into getting puts. So This is how simple it is. How would I play this now? Let's say you're getting a week out, right? You're getting a week out, so you're looking at Jan 20 puts for 155, let's say. The way I would play is this candle is 160 and 160.17. There's a 17 cent. Let me just redo this. Hold on. Always have to make sure to see where it originated. Let's go daily first. So I like daily better because you want to be sure here. So this is daily, right? Let's go check an hour now just to make sure. No, I like daily. There's a gap up. So do you guys see there's a gap up? So I'm going to keep the longer range. So now on a 5 minute, how am I playing this? Like this is a $5 zone. Usual cases, I wouldn't play it. But for tomorrow, I'm watching this very carefully because look, if we get like, let's say CPI is amazing, right? We're only going to play this if CPI is amazing. If not, then this is going to gap down. Then we follow a different tactic. But let's say CPI causes this gap up. What I'm watching here is, let me ask you this, guys. What's the psychological number after 160 for NVIDIA? Like that number that comes to you where sellers could be there. Anyone? You're mute, Mark.
I said I have one, but I'm going to see if the audience has one.
I really hope it's making sense. So after 160 breaks, what's the forget support resistance, what's the psychological number that most people will be looking at taking profits?
165 or 170. Yeah.
So what I'm watching, Mark, is I'm watching 165 here, and you can draw an alert there. So if we gap up, I'm looking to go short on this if we fail at 166, and then if we fail at 165. And I'm not going to wait for, ideally how you want to play is you want to wait for the supply to fail. So you need an independent candle outside the zone, right? For tomorrow's purposes, I'm seeing how this does and if there's any flow coming. So another thing that I haven't talked about, I told you guys, you can look at this and go MA, moving, all that fun stuff. I don't do that. I look at this and I watch flow. I'm watching any puts coming for chips. If anything comes from AMD, SMH, I'm going for this. This stock, I'll show you something, and this is called relative strength. I'm kind of teaching you something else apart from that. So this is AMD since Monday. It gapped up all the way to 160 and it hasn't been able to break that. What's that telling you? There's massive sellers sitting here. Who are these people? These are bag holders that have been holding, and they know economy is getting bad, so they want to get out. Let me show you what a strong stock looks like versus what a weak one looks like. This is Amazon. While this thing has only done this, Amazon went from 81 to 95 in 4 days. That's what strength looks like, not this. This is what weakness looks like. This thing keeps getting sold here. Same thing with Tesla. It tried today, but like it's still doing better. So forget about this. We know this, but so this is the last 4 or 5 days. We gapped up solid to solid, pulled back, solid. So what does that tell you? Somewhere here, there's a supply. There's a seller somewhere here that keeps selling. You could just look at the, I'll show you. Look at this wick. Look at this wick. Look at this wick. Look at this. Look at this. There's sellers somewhere here sitting here. They keep selling around this area. If you look at it. So you can, I'll just do it with you guys here. You can just draw a supply here, 124 area. These guys, so look, this is where we identified the zone, sold here, sold here. We haven't been able to. So if you're like, Mo, I want to really buy calls on this, check above 125. 125 breaks, you can look at it. Teresa, I honestly, if I start talking about flow here, won't be able to explain it. This is like a 1 hour podcast, but supply and demand, you guys need to know, not the details. If you don't want to learn it, you can still use your own indicator, but just know there's powers beyond support and resistance that most people fail at. I was a breakout trader, and this is what happens. And I'm telling you because I know how premiums work. Apple is 150. I have a resistance at 152.5. When it would break, I would get in. Problem is, all of us are watching the same thing because we understand support and resistance. So at 150 to 50, the premium would go high because the IV's gone, because the demand's gone up. It would break, and right above that, there's a supply. I'd get caught up in the supply. It would go retrace back, and I'm kicked out. It would happen again and again and again. I can teach this to what, 25 people. I had about 65 people last week. I can teach about 100 people supply and demand, and all of us can draw a 30-minute demand zone on AMD, and it will be exactly the same to the decimal. It will be the same. But if I take 10 people and told them to do a support and resistance on AMD, all of us will come up with different ones. That tells you like why certain things are approximation. When we're scalping, trading weekly or even 2 week or even a month, there is no such thing in approximation. We need stuff to the T, because if we mess this up, there's big money involved. So for zones, you're correct. I look for, so the market will give you zones already. So you can most likely, every ticker you can give me. So in this case, AMD, we found a zone and it's getting tested. So we can trade this. So you don't ever have to wait. Most of the time it's tested. When you have to wait is if you're doing intraday trading, which is a little bit more complicated because you have to do live zones. And then you have to see, okay, so this is a zone. Let me see test. I would take trades on the first test. That's what I do. So then you have to do live. But if we're doing swing trading, you can go daily, hourly, 4 hour. You can pick whatever you like. But don't like, for instance, let's say we're trading this on a Friday, okay? This zone doesn't help you. It's a 6-point zone, right? So you could be like, okay, then you have to go in a 30-minute zone. So your zone will depend on the time frame. If I was to take NVIDIA short, I'm personally looking at it at March 120, 130 put. So I'm looking at like a 2-month output. So that's why I'm okay with looking at daily. But I think that sums up enough, and we can keep going back to it. We can do intraday next time, Mark. I don't want to confuse them.
Yeah, that sounds good. Do you guys have any questions at all when it comes to supply and demand? And does it make sense? Do you guys understand how to find a supply and demand zones? I know there's like a 5-second delay because I'm watching this here on my computer screen. So, all right. So I think that was good. Like I said, everyone remember, trading does come with a lot of high risk. Be careful on who you listen to as well when it comes to trading, because a lot of people on Twitter, online, who will sell really expensive courses or tell you that they're successful traders without proving it. So just be careful out there. Again, if you're brand new to trading, do not trade during CPI. Can you agree with me on that, Mo?
Yeah, it's a recipe for disaster, because if we get a fade move, so what happens is, Mark, any number that comes on CPI, they came after hours. So you need low volume to break, right? And so if you're looking at support resistance, whatever the hell you're looking for, it most likely will break. And then the highest chance where I say we can make the most money is how most people get bagged when you get a fade move.
Until next time, y'all, peace out, and thank you for tuning in. Bye-bye.